Ladies and gentlemen, good day and welcome to the IKIO Lighting Limited FY23 and Q1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us today the senior management team of IKIO Lighting Limited, Mr. Hardeep Singh, Chairman and Managing Director, Mr. Sanjeet Singh, Whole-Time Director, and Mr. Subhash Agrawal, Chief Financial Officer, who will represent IKIO Lighting Limited on the call. The management will be sharing the key operating and financial highlights for the year ended March 31st, 2023, and quarter ended June 30th, 2023, followed by a question and answer session. Please note that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Documents relating to the company's financial performance have already been emailed to you and are available on the website of the stock exchange and the company's investor section. Trust you have been able to go through the same. I now hand the conference over to Mr. Hardeep Singh. Thank you, and over to you, sir.
Thank you very much. Good afternoon to all. Thank you for joining us on our very first call after listing. We will be sharing key operating and financial highlights for the quarter ended June 30th, 23, and full financial year of 22-23. But before we begin on quarterly updates, since this is our maiden call and some of you might be looking at the company for the first time, we would like to take this opportunity to brief you all about our business model and some key aspects of our corporate structure. So, we are an Indian manufacturer of high-end lighting solutions and operate primarily as an ODM, that is original design manufacturers, that designs, develops, manufactures and supply the products, mainly LED lighting, to our customers who then distribute these products under their own brands, and we work with our customers to develop, manufacture and supply the products that are designed by us. Over the years, we have successfully developed a strong, diversified product offering over 1,000 SKUs right now. As an Indian ODM, we take pride in our strong in-house R&D department, which is product designing, tools, mold designing, electronic circuit designing, prototype designs. Our R&D department independently develops ODM designs and verifies, develops, and OEM receives customers and converts such design into deliverable products by improving the designs, recommending suitable raw material and testing of trial products. These products are manufactured at our all 4 well-integrated manufacturing facilities, of which 3 are located in Noida and 1 in Haridwar. In line with our focus, provide end-to-end product solution and develop better control on our supply chain and improve margins, we have backward integrated our major manufacturing. We have developed in-house capabilities, so we manufacture all mechanical components in-house, but not the diodes and resistors. We also adding new facilities, which is funded by the IPO proceeds, the details of which have been mentioned in the investors' presentation as well. We will be constructing 3 blocks, totally 5 lakh square feet. Block 1 of 2 lakh square feet, Block 2 of 2 lakh square feet, Block 3 of 1 lakh square feet, over the next 24 to 30 months. The civil construction is almost completed of Block 1, it is a under the final shape near completion, and we are targeting by end of quarter 3 of this year, we will be going to finish that, and we will start installing the machines and equipment which we have already ordered. So this, along with continued product development, will be enable growth in the coming years. I will now request Mr. Sanjeev Singh to provide his thoughts on the quarter as well as provide some updates on financials. Thank you.
Thank you, Hardeep. Let me now take you through some of the key operational highlights of the quarter gone by. ODM Lighting Solutions grew in line with our expectations. However, on the exports front, the inventory clearances in the USA impacted deliveries in the month of May and June 2023. However, we are happy to share that regular deliveries have commenced from August 2023 onwards. Further, it is important to note, which some of you might be aware, our first quarter is the leanest quarter for most of our segments. And generally, the way the revenue breakups during the year is, the first half contributes to around 45% of the overall revenue, typically, and the second half around 55% typically. Now coming on the financials. While our CFO will take you through the financials, it is important to understand some key nuances of our reported financials. As you are aware, just prior to our IPO process, we had decided to bring all related businesses of the promoters under one roof. Accordingly, on September 12, 2022, IKIO Lighting Limited became the holding company and 4 subsidiaries came under IKIO Lighting. These are Fine Technologies, Roylux Lighting, Roylux Exports, and IKIO Solutions. Now, because this happened in the middle of the year, our financials included in the quarterly release needs to be read with some context. Let me just give you some key aspects. In the full year FY23, the consolidated numbers that have been reported include standalone financials of IKIO Lighting for full year FY23 plus all 4 subsidiary financials only from September 12, 2022 to March 31, 2023. This is because under Ind AS, we consolidate only for the period that IKIO Lighting was in control of the subsidiaries. Accordingly, any quarter that is before September 12, 2022 cannot be compared with the current quarter. Therefore, financials reported for Q1 FY24 cannot be compared with Q1 FY23. And our next quarter, that is Q2 FY24, comparisons will also contain the effect of this. For ease of your reference, we have explained this on slide 9 of our investor presentation. We have provided details of the entities that have been used in consolidation. For details on how the financials would look like if the entire year was consolidated, please refer to slide 30, where we have displayed pro forma unaudited financials of FY23 to enable like-to-like comparison with previous fiscals. We request you to please read both these slides to ensure that current financials that have been reported can be read and understood in the correct context. I will now request Subhash ji to please go through the key financials.
Thank you, Sanjay ji. Good afternoon to all. Let me now take through the key financials for the quarter ended June 30th, 2023 and full year ended March 31, 2023. Let me once again reiterate the fact that the financials we have reported Q1 FY24 and Q4 FY23 contains the consolidated financials of IKIO Lighting Limited and its subsidiaries. Q1 FY23 is actually the standalone numbers of IKIO Lighting Limited, since the company had not yet acquired the subsidiaries, and therefore FY23 only contains about 200 days of consolidated numbers of all subsidiary companies, financial information for the whole group. Let me take you through the key highline numbers on a consolidated basis for Q1 FY2024. Our revenue was 1,084 million, of which the largest share came from the sale of LED lighting solutions, followed by other products. So our EBITDA came in 237 million with an EBITDA margin of 21.7%. Our margins are in the same range as our previous quarters. Profit after tax stood at 138 million, accounting for a PAT margin of 12.7%. For the full year, as you would recollect, the consolidation is only for 200 days. Accordingly, the numbers cannot be meaningful compared with the previous periods. To make it easy for the investors to compare the numbers in the IPO documents, we have prepared pro forma financials that shows the illustrative impact of consolidation for all subsidiaries for the entire year. Please note that this is only for the ease of comparison, and these have been prepared and vetted by our accounts team, but have not been subjected to any limited review or audit. That concludes our opening remarks. I request the moderator to please open the floor for the questions.
Thank you very much.
Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ritesh Polaria from Girik Capital. Please go ahead. Ritesh, your line is unmuted. Please proceed with the question.
Am I audible?
Yes, you're audible.
Yeah. Thanks for the opportunity. So my question is on your capex. So this, what would be the total capex for this 5 lakh square feet construction?
This capex for financial year 23, that is 117 million we have already added. Can you repeat your question, please?
What's the capex for this 5 lakh square feet construction? It's a 212 crore that's given in the prospectus.
Yeah. 212 crore is for the plant and machinery and construction as well.
Yes. And out of this, this block 1 would be commissioned by Q3. That's what given in the presentation. So what would be that block 1 amount, and when are the rest another 3 lakhs will be commercialized?
So actually the block 1, like mentioned in the presentation, will be commissioned by Q3, but production activities will start, maybe it will take another probably 1 to 2 quarters because of the auditing and the certification and all of these processes. So that is where the production will begin. And to give you an idea of, you were asking about the block 1 value.
Yes, sir.
So that will be that will be close to around 40 crores.
Sir, I couldn't hear that figure. Can you repeat, please?
It will be close to around 40 crores.
40 crores. And when are the other blocks will be commissioned?
Yeah, just the building. The plant and machinery has been ordered to us. That is separate.
And when block 2 and 3 will be commercialized?
So actually, the construction will happen in the next 24 to 30 months, and thereafter, again, it will be commercialized as per the approvals, certifications. So, but right now, what we are looking at is the construction and completion of those plants will take close to around 24 to 30 months.
So, so do you have enough capacity to cater to the FY24, because the next capacity for all practical purpose will come for the next year. So for these 3 quarters, do you have enough capacity, or if you can give us what's the capacity utilization of the current facility?
So currently we have enough, capacity as per the plans that we have for the current year. And going on for the new plant also, we have plans. That is why this, the plants and machineries, they all have been ordered. But if I talk of this year, we have, as per the plan, we have enough capacities to fulfill the plans.
Sure, sir. And sir, for this 108 crore revenue this quarter, how much would be from your own design and how much is pure outsourcing?
This is all all our design products, because we are ODM and we design the products for all segments, not only the high-end home decor lighting. Whatever we are making, they are all our own designs and approved by our customers. Hello?
Yes, thank you. Mr. Polaria, may I request you to join the queue for any follow-up, as we have several participants waiting for their turn. Thank you. The next question is from the line of Atul Mehra from Motilal Oswal Asset Management. Please go ahead.
Yeah, hi, good afternoon, and thanks for the opportunity. Sir, just one question to begin with is, after the entire capex is fully commissioned, what will be our total top line in terms of capacity from versus what 450 crores that we did in the last financial year? Once the entire capex is fully commissioned, maybe 2 years down the line or so on, what will be the revenue capacity of the company?
See, you can look at it, this way, that typically our FA turn has been in the tune of around, around 5.5 has been our FA turn, and this has been the typical figure since we've been into the LED lighting manufacturing and electronics business, and going forward we intend we are expecting that this figure will be achieved once we achieve a certain point of capacity utilization of close to around maybe 60%.
Right. Got it. And secondly, in terms of export opportunity, is there in terms of any further update on exports where, I think one of our key partners is Philips, so what can be the export opportunity that can come about from Philips from a global basis?
As Mr. Sajid told, that we are finishing this project, and working with them is only we are making that unit as per international norms and standards, what Philips needs or our other customers need. So once that facility is ready, we will do the audit, because for exports we need to have a lot of audits and all. So we will be ready by you can say first quarter of coming 24. So that is our plan.
Right. And so just one other final question is, there are a lot of opportunities, like last week we saw this entire laptop opportunity open up. So are we thinking on these lines around laptops? Because in this space, increasingly what we are seeing is import substitution being a key focus area by the government. So from our business plan orientation, are we considering any of these new products like laptops in our business plan for the next 3 to 5 years?
So actually, if you look at our product portfolio and the business verticals, we already have a very diverse product portfolio catering to 3-4 different business verticals. Currently, what we are planning is to invest our resources, time, and the R&D capabilities on the existing portfolios, the existing products which we have, and to further expand the products that we are doing, product lines that we are doing, related to those particular categories where we are functioning as of now. So we want to utilize our strengths in these areas for now, and that is why we are not basically looking at this particular avenue.
Right. Got it. Thank you and all the best. Thank you.
Thank you so much.
Thank you.
Thank you. The next question is on the line of Nilesh Soni from Prabhudas Lilladher. Please go ahead.
Yeah, thank you and congratulations, sir, on decent set of number. So I have two questions relating to Signify. So how have been the home lighting segment with Signify performed during the quarter? Can you elaborate on that, sir?
So you're talking about the Signify business for the first quarter?
Yeah, for the Q1.
Yeah. So if you look at the performance of Q1 of IKIO Lighting on a standalone basis, where we are manufacturing for the ODM home lighting division, so that has seen a very good growth of around 25% compared to on like basis compared to the first quarter of the last year, and we are seeing good momentum, and going forward, that is why, like I mentioned, we continue with our strategy of bringing in more and more products and product categories to further strengthen the relationship and even the growth momentum.
Okay. And on number terms, if you can guide us, what would be the outlook for this particular Signify for FY24? Means if you can guide anything on that front, on revenue front. Yeah.
We will be numbers. You can see that we are going at the pace of 15 to 20% normally with them, and this is the growth we are looking for this year as well.
Okay. And secondly, on this, you mentioned in PPT that there's somewhere around 800 SKU in your Signify SKU with them. So, what's your plan to grow that number for FY24? Are you adding every quarter or?
Actually, this is a pipeline. There is a very normal schedule, like the festival season. Before the festival season, we launch more products. Then we start for the new product development in the Q1 of the next year. So this is the strategy that whatever we develop, it should come before Diwali for the year itself. So for next year, we will plan after. We have already started planning after Diwali what we have to do, and after first season what we have to develop. So the pipeline has been already created for that.
Okay, got it. Thank you. If I have any question, I will be in queue. Thanks a lot, sir.
Thank you so much.
Thank you. The next question is from the line of Chetan Ginodia from Alpha Accurate Advisors. Please go ahead.
Hi, sir. I wanted to understand about our RV business. So currently, I think this quarter we had the others revenue of 10 crore rupees. So how do you see this recreational vehicle business scaling up for us? And do we have confirmed orders for this? And, generally, what is our content per RV that we see and margins on the same?
Yeah. So as we started only a year and a half before this RV business, and it took us a long time for the certifications and everything. And we have sent a lot of material, and now the sales are picking up, as we told you, because of China, some problems and all. So they stored a lot of material, but now the season is starting up, and the sales are also picking up because of their new year is coming and all. Also, we are going to set up our sales office in USA, and it will add on to our to boost the sales. So this is our target, that we should have our own sales office, our own people to nurture this market. This market potential is very huge. Looking at that, so we are focusing on that.
Okay, got it, sir. And so, do we have confirmed orders with our major customers here, which is Rolex and Zenergy? So, we have orders for what quantum of equipment we'll be supplying for next 2 years?
Yeah, we have the plans for that. The categories we are adding that in that is the lithium battery for that vacation vehicles also. We also got a confirmed order for that. The 1 million we are going to ship next month, and so it will keep on continue. And the new product range we are developing. Numbers we can share you in coming quarters very soon, that what we will achieve.
Okay, got it, sir. So this is largely...
we have very good... Actually, we have a very good plan for that, and clarity is there. And last 2 weeks, we air-shipped some shipments to cater the products. So this is how we are running with them.
Okay, got it, sir. Sir, can you also explain us about your commercial refrigerator lighting business? Who are our major customers here, and how do you see this scaling up?
So the commercial refrigeration business has been constantly growing since the past couple of years. And if I mean, our major customers would include Western Refrigeration, then there is Frigoglass, then there is Voltas. So basically, we are supplying, commercial refrigeration, lighting products, and other electronics to them, including, the IPS stabilizer as well. So these are some of the major products that we are supplying. So going forward, we expect our growth momentum to be, like if I talk of the first quarter, so we have grown by 25% as compared to the first quarter of last year. And that is largely due to the fact that, again, in this category also, we try and bring in as many products as possible to diversify our product base. And that has been our strategy all along, and we'll continue on this path. And going forward, we are also looking at, the export market. We are currently exploring the export market. And if anything substantial comes up in the near future, we'll definitely let you know in the coming quarters.
Share any guidance in terms of overall company level top line growth and margins, or your aspirations with respect to profitability for next 2 to 3 years, that would be helpful.
So, as far as revenue is concerned, we cannot give that futuristic number, but we see and believe that our growth momentum on top line will continue. And as far as the margins and PAT is concerned, that also we see to sustain that kind of earning.
Okay, got it. Thank you, and all the best.
Thank you. Thank you, sir.
Thank you so much.
Thank you. The next question is from the line of Keshav from Raxan Investors. Please go ahead.
Hi, sir. In a few media interviews, we've attributed our margins to us doing ODM for LEDs. But if I look at our peer, which is 3 to 4 times the revenues we do, and most of it is also ODM, but we are still managing to do 2.5 to 3x the margin in comparison. So can you help understand the specifics of how we are able to generate such margins?
So basically, there are a couple of ways to look at the way we are managing our business if I talk of the ODM lighting products that we are doing. So typically, our margins were also at the lower end of, the spectrum. If you look at our historic figures dating, 4 or 5 years back. So till that time, we were also dependent majorly on the imports. And we were mainly doing assembly of the products. But since the past, 5 years, we started our journey of doing this backward integration, and we are constantly adding more and more, backward integration processes to our manufacturing in order to, so that was majorly done to, bring in the kind of quality that we want to manufacture for our customers, and at the same time to bring in the control that is required to manufacture these many SKUs. Because at 5 years back, I don't have the exact figure, but we were manufacturing close to around maybe 150, 200 odd SKUs, and today we are doing more than 800 odd SKUs. So that has only been possible because of, the backward integration that we've been able to achieve. And going forward also that is going to be our, I would say, strategy and the core strength. And we are investing also heavily on this with the IPO proceeds going forward for the backward integration. And that is where, our margins and productivity also lies.
Also the quality of products and the on-time delivery. So many things are focused on the backward integration. So we can make the world-class products, and once we are ready with everything, we know that the market is huge for us.
And if you look at the product mix also, we are not doing, the commodity products, the inexpensive commodity products like the bulbs and the patterns. So we are doing mid to high-end home decorative lighting products. So that is why probably,
Sir, in this functional lighting segment which we are into, how is the market structured? I mean, is the bulk of manufacturing in-house to the brands?
Sorry, can you repeat the question?
So, sir, we are in the decorative category and broadly in functional lighting, as you previously mentioned also. So, in this, what is the structure of the market? Is the bulk of manufacturing in-house with the brands themselves?
So if you look at the overall LED market space, I am referring to a report by FNS dated, the figures are from I think FY22 if I'm not wrong. So the overall lighting space was at that time 220 billion, and out of that the high-end home decorative lighting, which includes the functional lighting as well as true blue decoratives, where we are not functioning, not in the true blue decorative. So that consisted of 35 billion and remaining was 185 billion. So if you look at the, the functional decorative light or high-end home decorative light, it was relatively very small compared to the overall LED lighting space. So that is why, what we were also doing up till 4 to 5 years back, we were also importing everything and doing assembly. So I think majority of the players in this category, they are doing this only as opposed to probably, manufacturing everything in-house, because for that you need to have a lot of SKUs, production, the volume should be there. Whereas relatively this market size as of now is small as compared to the overall LED lighting space.
And it is increasing the segment which we are working, it is increasing year on year and quarter on quarter basis. So that is how you can see still our lighting business with our as a ODM is grown in the first quarter about 25%.
So out of the 220 billion market space, functional decorative lighting is only 21 billion. Which is, like Hardeep sir mentioned, is growing constantly. But I am just trying to make a context here. So that is why, like you mentioned, a lot of players are not able to manufacture everything because the volumes for them are not there as of now.
Sure, sir. So lastly, whatever growth plans we have currently in LED specifically, we would broadly be sticking to functional lighting only?
Can you repeat the question? Sorry.
So whatever plans we have in whatever plans we have for LEDs, would we broadly be sticking to functional lighting category only?
So functional lighting, you're talking about the ODM business per se, or the group?
The ODM business.
Yeah, so the ODM business, majority of our products that we are doing are catering to the functional decorative lighting space. Apart from that, we are also, venturing to other product categories which are related to this, and we are already doing some of these products, and we will be, prime focus will be on the functional decorative lighting space plus related products.
As we are partner with ODM partner with one of the leading brands of India, and that is how we are serving them. And we have a very good growth plans for them. We are already started developing the rechargeable fans as well. So this market is also huge, as this is a virgin market for this, and we are entering into this also.
Thank you. The next question is on the line of Viraj Jain as an investor. Please go ahead.
Hi, sir. Congrats on the decent set of numbers. My first question would be, do you have any plans to enter into the B2C segment where you intend to sell directly to the consumers?
No, not at all. As in our when we meet the investors during our visits and all, so we are very much working with Signify, as everybody knows that, and we are very happy with them, and we feel that is our own brand, and we are serving them like a strategic partner, not as a supplier or vendor. So we are looking for the very long-term relationship with them, and that is how we feel that we are a strategic partner. We are not the suppliers or vendors, or we are not going to all their distributors or dealers. We feel that what we are giving them, they are selling that. So no need to go to B2C.
Okay, sir. And my one last question would be, do you intend to do the ODM business in the home lighting segment for any other brands other than Signify?
No, as I said, they are almost have the 50% market share in this segment, what we are catering into. We are very good with them, and this is a journey of 11 years with them, and we don't have any intention to work with any other brands as well.
Okay, sir. Thank you, sir. All the best for the future.
Thank you.
Thank you. Before we take the next question, I'd like to remind the participants to limit their questions to 2 to 3 per participant. If time permits, you may join the queue for any follow-ups. Thank you. The next question is from the line of Rahul Ranade from Goldman Sachs Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. So just wanted to know if you can, kind of provide a comparable number on a YY basis, Q1 versus Q1. I see that you provided pro forma for the full year FY23, but would be good if we can get a comparable on a YY basis also.
So Rahul, on the Q1 Q basis, we are not supposed to prepare pencil for Q1 FY23. So that I can help you provide the revenue numbers only. On console basis, last year in Q1 FY23, we had the revenue of 960 million as compared to 1084 million. So there is no overall Q1 growth is around 13%.
Okay.
Reply your answer the question?
Yeah. So here, sir, just wanted to understand, because we referred to, let's say, the Philips business growing at 25%. That is the biggest part of our business. So that has grown 25% YOY. You also mentioned commercial refrigeration has also grown 25%. So what has been, kind of the drag on the overall growth? If the overall growth is 13%, there would be some degrowth in some business, right?
So actually in the export category, like you rightly mentioned, there was the degrowth in the export category of around 35%. So the reason for that, like Hardeepji mentioned early on, majorly the inventory clearances were yet to happen, and like Hardeepji mentioned that now since August, this month only, normal deliveries have already commenced, and we are on track to meet the targets. So, and going forward, like Hardeepji mentioned, we are also opening up our branch office in the US. We'll be having our own marketing and sales team, and that will eventually, boost our sales as well. So this was largely due to the inventory hold-up that was there in the US, which has now cleared up, and deliveries have again commenced.
Also for it took little time, more time in getting the certification, because the certification for USA market are very tedious and very from the UL laboratories and Intertech. So we already got all the certifications. We have about now 30 certifications for the products. So it took us a long time, and also we are entering, as I told you, we already got the orders for lithium batteries, and we are entering into that segment. That segment itself is a huge segment of what we are looking for. So that is why we are planning to open our office and everything. So it will give the major boost in our sales.
Okay. And this inventory clearance that you are referring to, was this because of some demand slowdown that happened in the end market, or how should we think of it?
No. What happened after COVID? There were very logistic problems, as well as the supply chain, other problems like the component shortage. So what happened? This RV people, to secure their production, they over-ordered the products, and as everybody knows that USA market was a little bit slow for the first 2 quarters. Their first 2 quarters means from January to till you can say June, it was a little slow, and they were they were overstocked by the products. So now those products are all consumed, and now the things are becoming more normal for them. So we are also getting the same query for them. So every day we are getting some new orders, and this is how this market is. Some visitors are traveling to us for the new businesses and all. So this is how we are going to cater that market.
Oh, okay. And delay in getting certifications, is this, for some new customers that you are talking about? Because we have been in this business for the past 2-3 years. So is this a new customer?
No, it is not. Certification is the common for the product, not for the customer. It is like USA, they have 2 type of certifications. One are performance-based, one is safety-based. So all these certification need to have before shipping the goods to USA. So it took us a little long time, and now it is all done, and the supplies are going to start very soon.
Okay. But we were, we were exporting to USA, right, in FY23 also? Or is this a new geography?
Adding the new products. We are adding new products. That is how the lithium battery, this is the first order we get. Some other old product pipes and all also start moving. ADS pipe, RV lights also start moving. So this is how we have, before we have indoor lights, now we have outdoor lights as well for RVs. So we are giving now the complete package of that.
Okay. And sir, if we look at the presentation in terms of the sales, where we are highlighting that LED products as one segment, commercial refrigeration as the second one, and others is the third one. So what all is included in others?
So we are making the USB chargers, we are making MCB switches, we are making rotary switches, we are making IPS controllers, we are making some drivers. So all these products are coming under the others category.
And, since this is our first call post the IPO, we decided to maintain, parity with offer document to ensure continuity of disclosures for investors who had, who had invested on the basis of the RHP. However, going forward, we understand, the investing community will look at various matrix to evaluate our performance. So we will take the feedback from, maybe the next 2 or 3 investor interaction calls and incorporate it in our future communications.
Sure. Because I think the way most of us actually, kind of understood the business is Philips being one which is, kind of different kind of business. Then we understood retail lighting as another part of the business, which, I don't see as a part of the current segment representation that is there in the presentation. So that was the second part. And then there were, RV as one line of business, and then there were also, refrigerator products as another line of business. So I thought, the same would have been maintained. But happy to take this offline and, kind of get more details on that. Yeah.
Sure.
Yeah. Thanks.
Thank you.
Thank you. The next question is from the line of Suraj Navanda from Sampada Investments. Please go ahead.
Hello, sir. Good afternoon. Sir, I missed the growth numbers you mentioned for current financial year. Can you please repeat it?
Growth, consolidated number of group?
No. Growth in revenue for FY24, I guess you gave a number for it.
No, for FY24, FY24 number is yet to come. I'm talking about the FY23 group numbers.
Okay. So, can you give any growth guidance for FY24 on our revenue front?
24 is a futuristic number. We cannot... we can simply say that we are going at the same pace what we are being into, and we are sure that we will achieve that. So you can assess the numbers.
Okay. So what is the growth end of quarter one?
Sorry, can you repeat the question?
What is your order book? What is your order book end of quarter one?
So actually, our business model is, we don't have order books as such. It is the planning, that we work with, like, the ODM business that we are working with Signify. So we work on planning. Strategically, we, sit together as a team with the, with their stakeholders as well. And that is how we come, they give us the planning that this is what they are looking at. And that is how we maintain our raw materials as well, because we do most of the, the production in-house, even the backward integration. So we just have to maintain certain components, and based on that planning only we do. So in our business model or, the different categories that we work in, there is no such order book. It's only the planning that we work on.
Like we have, the system of planning is so robust that the accuracy in that planning is almost, you can say, plus minus 5 to 10%, not more than that. And this is in all our business segments, not only the Philips Lighting, but all our businesses are like that. We have a confirmed plan for the quarter to quarter, and similarly, we make the plan for our productions and deliveries and procurement.
Yeah. And so last question is that in our presentation, we have mentioned that our new the capacity that we are expanding of 5 lakh square feet will also be doing some solar panel and systems. So is it the rooftop solar panels that we do, or can you please is it the domestic market, or how it is?
No, solar panels we are not going to make for the domestic market at all. We are focusing this product only for USA market, and we are giving them the solution, not the panels. Like it includes all the connectivity, solar charge controller, their mounting clamps, then because this is a commodity, solar panel is a commodity item. We can get it from, we can get it outsourced, and we just give the solution to the customer. So that is more beneficial and more profitable in the terms of execution.
And this also we are doing only for the RV industry in the US, not for the domestic usage, only for the RV.
Even not for the like the solar parks and all, we are not into that.
Okay, sir. Thank you, sir, and all the best. Thank you.
Thank you.
Thank you. Thank you so much.
A reminder to our participants, please press star and 1 to ask a question. The next question is from the line of Tanmay Mehta from Prescient Capital. Please go ahead.
Hi, sir. I just had a quick question about the client concentration. If I understand correctly, Philips happens to be one of our biggest clients in the LED lighting solutions. But if you could provide revenue share of top 5%, top 5 clients, or maybe some other insights about our client concentration.
So as far as the client concentration is concerned, as you can see in the document also, that we are 50% of our revenue comes from the Signify.
And balance is all from the like the refrigeration and other businesses, what we are doing. Exports, everything.
So we do not have that in front of us as of now. But like Subhaji mentioned, 50% is from Philips. Remaining, then there are so many customers, different products, different product lines. So sorry to say, but we don't have that figure right now in front of us.
All right. Thank you so much.
Thank you so much.
Thank you. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Thank you, sir, for the opportunity. There are 2-3 data points that I would want to understand. For starting with, what is our gross debt as on the end of month of June? If you could tell me.
Gross debt as of month of June, we have 480 millions of debt, consolidated put together all our subsidiary companies.
Right. This is after utilizing the IPO funds to pay off the debt, right? If I am not wrong.
As far as IPO funds is concerned, that 50 crore was the debt repayment which was scheduled, and another 13 crore we paid from the GCP. So 630 million, 63 crore was paid from the IPO proceeds, and 48 is balance as of now.
Right. Also, if you could, I actually missed on the consolidated numbers that you gave earlier for FY23. If you could just give it.
Consolidated number of Q1 23, it was around 960 million in the as compared to 1084.
Okay.
So the growth is consolidated growth is 13% in Q1.
Oh, okay. So from here on, it will be all consolidated numbers, right?
Year on, as we spoke, that our subsidiaries got clubbed from 12th of September. So if you see in that published numbers, they are restated console. So there is no apple-to-apple comparison for that. But for comparison purpose, we have given that in the presentation that pro forma console number. And there you can see that FY22 to FY23, there is a 35% of growth.
Right, sir. I get it.
This will continue, this will continue for the next quarter also, because like we mentioned, the September 12th, 2022 is the date when the consolidation happened. So the next quarter also, financials will be presented this way, but we'll try our best to give you pro forma numbers as well, so that it's easier for the investors also to understand how the company is performing.
Right, sir. And could you tell me out of in the quarter one,
Hello? Vignesh, can you hear us?
Sir, we can hear you. Vignesh, are you able to hear us? It seems we have lost the line for Vignesh. A reminder to our participants, if you wish to ask a question, please press star and 1 at this time. We have a follow-up question from the line of Suraj Navandar from Sampada Investments. Please go ahead.
Hi, sir. Just a small clarification I needed. The Q4 numbers of the last year are comparable with the Q1 of this year, right?
See, Q4 numbers are comparable, but the Suraj thing is that quarter first is always a lean quarter, so it will not be fair comparison between Q4 and Q1. But for consolidation purpose, you are right. These are the comparable.
Yes, I meant for the accounting purpose, they are comparable, cyclicality aside.
Yes, yes.
Just for accounting purpose, they are comparable.
Yes, the accounting purpose is comparable.
Okay, thank you, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference back to the management for their closing remarks. Thank you, and over to you.
Thank you very much. Thank you. So, thank you everyone for your participation and the time on this earnings call today. I hope I have responded to your queries, and we will always be happy to assist you for all your further queries. Though our investor relations team at Stellar IR Advisors, or you could reach out us directly. Our coordinates have been shared at the end of presentation. Thank you once again, and have a good day ahead for everyone. Thank you very much.
Thank you very much. Ladies and gentlemen, on behalf of IKIO Lighting Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your